This is Riviera FM.
Many thanks to Paul Murphy there for another wonderful music-filled show, as always. You're listening to Lioness on Riviera FM on Monday the 23rd of June 2014. I have Max and Nick in the studio here with me as usual, and today we're talking about money and asking what precisely is it. I'm delighted to say we'll be hearing from two people who in their own way have become headline personalities on the alternative media, that's in inverted commas there, with regard to the subject of money. Now, each have their own unique way of unravelling the murky and allegedly corrupt world of finance and usury. We may also surprise you today as we're proposing a number of practical methods of solving the credit crunch and the spiralling debt in the UK. So, money is a noun. It's a current medium of exchange in the form of coins and banknotes. Coins and banknotes, collectively. And the Bank of England says this: where does money come from? In the modern economy, most money takes the form of bank deposits, but how those bank deposits are created is often misunderstood. The principal way in which they're created is through the commercial banks making loans. Now, whenever a bank makes a loan, it creates a deposit in the borrower's bank account, thereby creating new money. This description of how money is created differs from the story found in some economic textbooks. That's what the Bank of England says. Whenever a bank makes a loan, it creates a deposit in the borrower's bank account, thereby creating new money. You can't buy love, but it can buy chocolate, which is almost the same thing. According to the Bible, money is the root of all evil. So I'm going to play you a little bit of music, and I'll have my first guest on the line after this. Now, this was released yesterday. No, I lie, Saturday. It's by Audible One, featuring Adjoa, and it's called Good Time Rhymes. And believe me, I just love this.
It's the good time vibes.
Elevate with good time sounds.
It's the good time rhymes.
Audible One that you are bringing down.
It's the good time rhymes. It's the good time vibes.
Just the good times make the world go round.
It's the good time rhymes. Gonna be ripping the syllabus up, filling the cup with the sticky stuff, expanding the mind of consciousness. No more nonsense, kids. Turn off the television, look inside for the vision. Life is much greater than the lies that we've been living. Yes, we've been fed a lot of bullshit up until now, but break free from the spell and your world will be restored. Every thought and action that you choose in your life defines the world you see. It's not the roll of the dice. So listen, kids, use love and not fear when you're breaking your bread. The universe will answer and awaken your head. Internal alchemy about to be gold at our lead. We're taking you to a higher state like bacon in bed.
It can't feed up off the ground.
It's the good time rhymes. It's the good time vibes.
Elevate with good time sounds.
It's the good time rhymes.
Audible One that you are bringing down.
It's the good time rhymes. It's the good time vibes.
Just the good times make the world go round.
It's the good time rhymes.
You know we got choices and we got a lot. Listen to those angel voices inside of your head. I can feel the heartbeat louder than the concrete. More and more reasons to get out of bed. We may see peril with the way the world is going, but on our waking minds like the pines they are growing. The light shines and the winds they are blowing, 'cause that's a brother power is all in the knowing. Like sight to the blind, me strength in the mind, no time to rewind, just forward with beauty to find me. I'm on the fire for the river, dry with water, with thinking time like summertime. We cannot sway and alter our lives are divine. We're here to remind that we cannot be bought. It can't feed up off the ground.
It's the good time rhymes. It's the good time vibes.
Elevate with good time sounds.
It's the good time rhymes.
Audible One that you are bringing down.
It's the good time rhymes. It's the good time vibes.
Just the good times make the world go round.
It's the good time rhymes.
Elevate with good time sounds. 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 It can't feed up off the ground.
It's the good time rhymes. It's the good time vibes.
Elevate with good time sounds.
It's the good time rhymes.
Audible One that you are bringing down.
It's the good time rhymes. It's the good time vibes.
Just the good times make the world go round.
It's the good time rhymes.
That was it. Good Time Rhymes by Audible One featuring Adjua. As I mentioned before, it was just released this Saturday, so let's hope it finds its way straight to the top of the charts, because it's the perfect chilled vibe, isn't it, for this summer love? For this summer of love. Don't you think? And I'll be playing that again until the groove wears out the back of it, I think. And also just want to say that on the 27th of August, which isn't that far away now, Riviera FM are playing the outside broadcast for the Red Arrows show there, and I shall be playing that live there, and there'll be a couple of live bands and all sorts of things, so please make sure you come along to that. Right, now my first guest created the White Rabbit Education, which in his own words encompasses videos, articles and case studies, independent education in law, banking and other interesting stuff. He spends his time studying and then making his information available to others. He admits to be learning as he goes along, and that some of his previous work has been updated as he learns more. So here to discuss his take on what is money, we have Simon the Spaniard. Hello, welcome Simon.
Hi, yeah, how are you doing?
I'm wonderful, thank you. Thank you for coming on the show.
No problem, no problem.
Now, you've been known as describing mortgages as a fistful of fraud. I love that.
Well, I tell you what, now that I understand how mortgages work, I can't actually see anything valid with them. So I struggle to find anything that is actually bona fide with regards to a mortgage product.
Yeah. Would you like to elaborate on that a little for the listeners?
Yeah, sure. Okay.
What if I was to ask you, what is a mortgage? What would you say?
Okay, well, as far as I'm concerned, a mortgage is the stranglehold that you grant to an alleged lender or to a bank, so that if you don't perform in the way they want you to, they can then come along and seize property.
Yeah.
So it's actually the stranglehold or the death grip grant into being. In other words, it starts and ends with us and something that we've done.
So the death grip from the French, more meaning death.
Well, yeah, mort meaning death,
Mm-hmm.
So, for a lot of people, and I know that, having come from the banking background, a lot of people confuse, or let's say that the word is used in the wrong sense. It's used to describe the loan,
Right.
as opposed to the mechanism that sits behind the loan. So, the loan itself, which is obviously non-existent, once people actually get into this kind of study, the loan is something quite separate and distinct from the mortgage.
Right. So there's more than one document. So I've theoretically found this lovely little house in the coast of Devon. I want to buy it. I've been working. I've saved up. I've got a deposit. I've got my money. I've got a nice job. I know I can keep the repayments up. I go in and I say to the manager, I want a mortgage. What is it they will do?
Okay, well, this is right up my alley from my days as a mortgage advisor. So,
funnily enough, that's why I asked you.
So the actual process.
It's as if it was planned that way.
Old eyes, just anyone out there that's just listening to this, thinking about what goes on a daily basis. Customer finds a property. Well, in fact, if the customer goes to the bank, they'll be sent away to go and find a property first. Once they've found a property, they tend to go to the bank, and they would then be encouraged to make their application. All right. Mm-hmm. Now, a member of bank staff can probably go through a few calculations initially just to make sure that you're going to pass, or someone is going to pass, the very basic qualifying criteria, usually regarding salaries, the multiple of that salary that they can actually borrow, and then whether or not that's going to generate enough of a loan size to buy the property that they're after.
Yeah.
All right. So that's the initial kind of conversations that people would have with members of bank staff.
That's right, and I think we could all recognise that. Everybody who's been in that situation recognises that for any sort of loan.
And then, of course, the next step is that, everything, ticking those initial boxes. If it's a case whereupon somebody then wants to apply for a mortgage, they then make their application, going through a lengthy form, which, as I understand from press releases now, is going to include far more intricate and private information about you than is ever required before. Mm-hmm. And then, that may or may not involve an application fee. It may or may not involve a valuation fee. And effectively what the bank member of staff would then do, once armed with that application form and the relevant fees, where applicable, is then go away and start processing that application with a view to taking it through to completion.
Yes.
Yeah?
Yep.
Okay, so would you like me to say what I kind of think really goes on?
Yes, please. Yes, please. That's the whole point of this, because
Right,
the Bank of England have actually said when it makes this loan, it creates the money.
Yeah, sure. So, okay, so this is how I see that it really goes on. And this can be, this can chop and change. As I understand it, the precise technicalities and the precise moves can chop and change between lenders, or alleged lenders, but it's effectively the same kind of process, or some form of the same process that's going on behind the scenes. So it could well be that the mere fact that you've filled out that application is sufficient to actually act as some kind of bonding, which then enables the true lender. Obviously no one's an actual lender of anything, but the company that's actually going to be taking hold of the rights over the accounts and the income that comes in, they may well produce some kind of bond or deposit by issuing a promise to pay, written on a piece of paper, which is then deposited with your lender. Effectively, that's been created off the back of, or as a result of, your mere making the application, so that in effect can generate the funds. And then it's a situation where the mortgage company effectively grants you access to that credit entry. All right.
So what you're saying really in simple terms is that when you apply for this mortgage, the minute you've signed that form and say, right, I'm signing that I'm going to agree to have a mortgage or a loan of, let's say £100, the minute you agree to that, that effectively is what sets the wheels in motion, that creates that money, that puts it into the account that then they theoretically lend back to you.
Yeah, absolutely. And that actual mechanism, the paperwork which goes through or the transactions which they pass can vary, but in essence it's the same difference. And the way in which it's created is this: someone is going to deposit a piece of paper with a signature on it with the bank. The bank is going to or someone at the bank is going to tap that into their computer system, and that gives them that piece of paper with the signature on, gives the member of staff on behalf of the bank the excuse to tap the keys and create the electronic digits on the computer system.
Yeah. So that is effectively a promissory note. I'm promising to pay you X amount of money that I'm just borrowing from you, that we're calling today a mortgage.
Absolutely. And in some law dictionaries, whether it's a promise, whether it's an explicit promise or just an agreement to pay, that's still a promise to pay.
Yes. Right. So then something awful happens. Let's imagine that we're all happy and we're in our little house and we've got the children settled and we're all in school and we've got it decorated and we are made redundant, can't afford to pay this mortgage. What happens?
From the customer's point of view, from we as people's point of view, we're probably going to start panicking.
We're told to get packing, yes. That's what happens.
We're going to start panicking, and we're going to think, well, I've either got to go out and get another job, or I've got to do something sharpish, because, of course, if I don't pay the mortgage, or the mortgage payment, which is effectively bail, it's bail suspending an action of repossession. If I don't get the money to pay the mortgage, I'm going to lose my home. So, in essence, for anyone that, there's options as to what you can do. You can either, step up your activity to get this brand new job in order to pay this bail money or this mortgage payment, or alternatively, you can liaise with the mortgage company to endeavour to make some kind of arrangement while you're experiencing difficulty.
Mm-hmm.
Now, unfortunately, the second option, which is liaising with the bank in order to, overcome a difficult period of time in your existence or a difficult period of time in your career or your life, way back when, I can remember when we were supposed to be extremely, as members of staff, we were supposed to be, really helpful with people. And in fact, I used to have the attitude that if customers helped me to help them, then of course I could help. But if customers didn't help me to help them, then there's very little I can do.
Yeah, that makes sense.
All right. So in some sense, especially when the attitude coming from the bank or the bank staff, when that's amiable, when it's helpful, productive, constructive, then of course I think most people wouldn't have an issue in liaising with the bank. The problem is that unfortunately that kind of era appears to have gone.
Yeah.
Banks are no longer, shall we say, forgiving when it comes down, or lenient, or shall we say, they're not pliable in terms of being able or willing, it would seem, to offer assistance. A lot of the actual debt collection or debt recovery attitude appears to simply be pay us or else.
Yeah. Why do you think?
Now,
why do you think that is?
To me, that demonstrates a severe lack of skill on the part of the debt collector. All right, because ultimately you don't want to take action against the customer. You want the customer to pay, and even if the customer pays late, from the bank's perspective, that's good for the bank because they collect additional interest and additional charges.
Yeah.
And when I was in banking, we actually had a target to have customers in arrears. Let me rephrase that. If the bank did not want all of its accounts paying on time,
Yeah. That makes sense.
it actually wanted a percentage of customers to be in arrear.
That makes sense. You can get more money out of them.
Because you can get more money and you can optimise your profitability, right?
And perhaps
So-
make them another loan at the same time.
Yeah, absolutely.
And so on.
You strong-arm them into another loan. You strong-arm them into a higher interest rate to penalise them for not being able to afford the first loan.
Yeah.
You sell them additional insurance, and of course, every time you renew a loan facility, the interest starts again.
Yeah.
And because interest is heavily weighted at the outset, it means that if you've had a loan facility or a mortgage, let's say a mortgage running for, say, 5 years, 7 years, even if it's a repayment mortgage, most of what you've paid, if not everything you've paid, was interest.
Yes.
All right, the capital doesn't start getting eaten into until the latter stages of the loan facility. And if it's an interest-only mortgage account, well, then you're going to need some kind of vehicle. Typically, in the past, that was an endowment policy to build up, pay out a lump sum, and then pay off your mortgage.
Yeah. Exactly.
Right? Or mortgage account.
Exactly. So, when people are paying back their mortgage every month, they're paying their direct debit or however they're paying, why are they paying when effectively they created the money in the first place? The bank didn't lend them anything because until they signed that mortgage document application, that money didn't exist in the world. So why are they paying? Why are they paying it to somebody when effectively they created it in the first place? Or have I got that wrong?
No, you've not got that wrong. The only reason that we are paying this is because we've been duped.
Right.
We have, I'm 45, or this body's 45 years old, and, ever since I've been on this planet, the story I've been fed, just like everybody else, is that, birds and bees live free and don't have to pay rent, but we do. As the highest, most intellectual being on the planet, potentially universe, allegedly, we've decided that, we're not going to operate like animals that roam free. We're going to charge. Someone's got to get paid so that we can exist on the planet.
Right.
Now,
well, the other people would argue that we're actually paying for the services. The classic one is, well, what would we do? Who would mend the roads?
Well, it's the funniest comment I've
That's
ever
the classic
heard.
one,
I
yes.
hear from people. I mean, let's put it this way. In terms of the bank, let's look at what the bank actually does. I'll take you through what the bank does in advancing these mortgage funds, bearing in mind it's such a hard load of work, right?
Will you stay with us to take us through that just after this little bit of music?
Yeah, sure.
Oh, you are an
Not
angel.
now, no?
Yeah, just after this little music.
Okay,
Stay with
yeah,
me,
no
don't
worries.
go away, and I will talk to you in a second.
Rightio.
Thank you.
You haven't heard anything yet? Stay tuned to Riviera FM.
You're listening to Lioness on Riviera FM, and today we're asking what is money. In the studio I've got Max and Nick with me, who are very quiet and just listening here. They are here, I promise they are. And we're on the phone talking to Simon Spaniard. Hello, are you still with us, Simon?
I am.
Oh, what a relief. I always worry at this stage.
I might have to nick that for one of the videos, but there you go.
Nick, which bit that?
that track you just had on, that was quite cool.
That was Shania Twain and Ka-Ching.
Right, okay, I'm writing that down now.
Now, you were describing us about why people are paying money back, and what the question is why.
Yeah, sure. Well, I mean, I think just before we broke for the track, it was a situation of what does the bank actually do to earn this money?
Yeah.
So, let's look at $100,000 mortgage or mortgage account loan, and anyone paying that back over 25 years is probably going to pay that back threefold. All right, so that's $300,000 that you're going to be probably paying back on average. So what does the bank do to actually earn that money? Well, it's a long hard slog for the banker.
Yeah, that's a good question. What do they do?
having given out misinformation to the customer, because that's what they do, that's what I did.
In what form?
Okay.
Telling them they're loaning them their own money?
Yeah, so having given out misinformation and unwittingly performed a bait and switch, baiting people or putting the carrot out of a loan and then switching it for access to someone's own credit or own future energy, if you like.
Mm-hmm.
The banker takes that application form, and sometimes the banker will fill that out as they go over the phone, and the reason that they're filling it out is so they can search for sales opportunities. All right? Let's be real about it. If I'm the banker, I'm going to look to cross-sell you, because I've got someone in front of me or someone on the phone. I'm ultimately going to look to sell them as much as I can to maximise that deal.
Yeah.
Okay, so that's going to be insurance, buildings insurance, contents insurance, mortgage indemnity guarantee insurance, and any other insurance I can think of. Life insurance, endowment policy, investment policy, critical illness, accident, all that kind of jazz.
Your pets, all sorts.
Right?
Yeah.
So having taken the application form, or having taken the application, which could last or should last about an hour if the member of staff's doing it properly, that should last an hour. Member of staff will go away, credit search, all right? Remember, you, the customer, you're paying for all the official searches at Land Reg. You're paying for the valuation, probably. So the member of staff then gets there, they get all their bits of paper together to make sure that what they write up dots the I's, cross the T's, and complies with their policy in terms of what they've said to you, the customer. So they will write that all up, what the discussion that they've had with you. But of course, they'll write that up in such a way that covers their backside.
Right.
Okay? Because they don't want to get told off by auditors. So having done the credit search, having written up their file, they may then, according to a tick sheet, just request information from you. Bank statements, pay slips, this, that and the other, details of the property that you're looking to buy, and so on and so forth. Now, the banker themselves, the only other work the banker's really going to do is potentially do a job reference, all right?
Yeah.
And then accumulate and gather together the paperwork which backs up the application. That's all they do.
Yeah.
Right? They'll be there to coordinate things and try and chase it up because, of course, the banker wants his bonus at the end of the month.
That makes sense.
Banker has a target. If the banker doesn't complete so many deals in a month, his job's on the line. So he's going to be coordinating and overseeing it. But you do that. We used to have screens with lists of customers. You tap one of the accounts, you go into the customer's file on the screen, and that just enables you to put your notes in one consolidated place or centralised place so that everyone that's dipping in and out of that account or in and out of that process can see what's going on. But what I can say to you is this: as a broker, the amount of work that we actually had to do per case, we called it a case, so per application, take it from start to finish, was on average about an hour and a half of time, right? Now, as a broker, the biggest commission, this is just for placing a loan, right? And I used to question where this money came from. But for placing a loan, the biggest amount of commission that my company earns from one case, one loan, was £22,000. That was for just matching customer with lender.
So for an hour and a half's work?
So for an hour and a half's work, we got 22 grand.
So,
Right.
Simon, you mentioned earlier, it's Max here, hi.
Hey, Max.
You mentioned earlier that it's energy. You're talking about money being energy. Is that what you think money is? I mean, we're trying to find out what money actually is.
Right, okay. Well, if you want to find out what money actually is, I mean, for example, I've got a definition here. You see, money, it's got here, this is on the free dictionary online, so just put it into Google.
Yep.
Here we go, it comes up online. If it's going to come up, I'm waiting for it. Here we go, money. Because there's different definitions. So a medium that can be exchanged for goods and services and is used as a measure of their values on the market.
Yep.
All right?
Yep.
So I like to consider money as being something where, you know, if we were old-fashioned barter times, you know, who's to say that the value of my table and chairs that I've just carved out of wood, who's to say what the value of that is compared to maybe a lamb that I want off of you?
Indeed.
Right? You know, how do we divvy it all up? Who's there to judge? So money, in a sense, is an actual way of measuring. It's so that I can compare my different goods and services to your different goods and services. But you can also view money as, I was going to say, a store of value. not necessarily the thing that we're using as money at the moment. If, for example, we were using gold, albeit the fact that gold only has a value because we place a value on it, you could look at a unit of gold as being a storage of value, right? Because it has a recognised intrinsic value of its own right.
Yeah.
Okay. But what we've got at the moment kind of represents. It's a difficult one, and I love getting into these kind of discussions. But
I kind of look at it like money. If you break it down in sort of mono eye, and what's one eye? When you think about it, it's a wink.
It's all right. We'll get him on his medication later. He's fine. He really.
It's true though. It's actually true.
but yes. So as far as I'm concerned, what we're calling money. What we're actually calling money at the moment, which is debt, as we all know.
Yes.
What we're calling money, or access to our own credit, those credit entries, that debt, is access to our own future energy.
So
you're the one having to go out to work to pay it.
You're saying obviously money is debt, and I think there are a lot of people listening who perhaps don't comprehend what exactly that means.
Right. Well, what we're using at the moment in place of money, we're using notes.
Yeah, if everybody was to get now, if you've got a £5 note in your pocket or your wallet or whatever, and just get it out and have a little look at it and see what it says.
Okay, yes.
It says on there, I promise to pay.
Yeah, absolutely.
But it doesn't say what you will be paid with. So if you were to take that to the Bank of England, where that promise, it's a promise, it's signed, it's a legal document. If you were to take that to the Bank of England, to those guys who signed that and promised to pay you that £10, for example, and you say, I want my £10, they'd look at you askew and say, well, £10 of what?
Yep.
What do you want? All they would give you is another piece of paper with another promise on, and that's the money go round. It's just a piece of paper.
Or they might say, look, it's all written in capital letters. We didn't mean it.
Yeah.
Well, I tell you what, this might interest you. So for people out there that are looking at that promise to pay, if I promise to do something, it's something I'm still outstanding. I haven't done it yet.
Yes.
So you could perceive it as being a debt.
Yes.
However, from Bouvier's dictionary, law dictionary, the definition of the word blackmail.
Yes.
Rents reserved, payable in work, grain, and the like. Such rents were called blackmail, in distinction from white rents, which were rents paid in silver.
And that's where we get the term from sterling, of course. It was a pound in weight of 99.9999% pure silver, wasn't it?
Absolutely.
Was what a pound was worth, the physical weight.
Its own recognised value.
It's there.
Now, I appreciate that people in our kind of semi-automatic state, which I would call the brainwashed state, you're still awake, but you kind of, it's like getting to the end of a car journey and you think, I don't even remember getting here. I don't actually remember the entire journey.
Story of my life, then.
An autopilot, right?
Yeah.
So that autopilot state, which is just a slither away from full consciousness, in our autopilot state, we of course accept these notes as money, right? But they're not money, they're evidence of a debt. So we are passing round debt, which is performing the function of money, all right, at the moment. But the fact that it performs the function of money doesn't mean that it's money. It's still debt, right?
It's bartering tokens, isn't it? To a value of whatever's written on the piece of paper.
Absolutely. So the way that we're actually working at the moment, the way that things are operating at the moment, we know that various parties, under the guise of some corporate veil, whether they're a government agency or whether they're a bank, demands performance which requires us to go out to work. And if we don't go out to work, they threaten to do something to us, either throw us in jail or take something away.
Yep, your house, whatever you've agreed that they can take if you don't pay them.
Absolutely. Well, let's go back to blackmail. In common parlance, the term is equivalent to and synonymous with extortion, the exaction of money, either for the performance of a duty, the prevention of an injury, or the exercise of an influence. So we're being blackmailed.
Yep.
Right? That is the modern system that we call the monetary system.
But this has been legislated so the Bank of England is allowed to do it, because those documents that they're passing out, those promise to pay, the £5 in your pocket, is a promissory note. There's nothing to pay with. as we've explained, you take it to the bank and say £10 of what? You'll just get another promise. That is all there is, other than coins, which, are still only worth the value of the notes.
Absolutely.
So that is actually a fraudulent claim. That is what would be known in financial word as a fraudulent paper.
Well, the funny thing is, if anyone out there checks out in a law dictionary, promissory fraud,
Yeah.
that's promising to do something that you've got absolutely no intention of doing.
And no ability for doing it at the moment.
Well,
So they physically cannot,
go
can
hand
they?
in hand.
They do.
So the point being, what we have, and this is what's so idiosyncratic about all of it, is that we've got a fictional entity that promises to pay us, and we who borrow from this fictional entity in the form of fictional currency, we don't actually pay that back, but in our minds we're paying that back by going out to work to perform a function so that the bank ticks it off its end and says that we've paid it back.
So we can be given more bits of paper to move it around. Yeah, absolutely.
Absolutely. It is blackmail.
It
So,
absolutely is, yeah. I'm in a situation again, Simon, where music comes up. if you want me to tell you what this one is, if you'll stay with us, hopefully we'll stay with you.
I'll ask you if there's any good.
I've got a little bit of feedback after this to tell you from Facebook. Some of it I think you'll like. This is going to be Sam Smith and Money on My Mind.
This is Riviera FM, broadcasting from the English Riviera.
And that was Sam Smith there, Money on My Mind. Hopefully Simon Spaniard, who's on the phone still, I hope, like that one.
That's okay. I prefer Shania, but there you go.
Oh, well. Can't please them all. We might get a next one then. You're listening to Lioness on Riviera FM today. We're talking about what is money. In the studio I have Max and Nick. You've heard from Max. Nick is still silently sitting and thinking over there.
I shall try to contribute later on.
Yeah. Your mic's not working. Try again. Try to contribute again.
I will try to contribute later.
Oh,
yes.
there's the voice. Right, there we are. That's got Nick there. Yeah, Simon Spaniard. Now, Simon, I've got some feedback here for you from social media.
Yep.
From Mark, who says, what is money? There's no money, only currency, and that's an IOU. This Tranquil Scotsman has said, it seems to me that if money disappeared right now, the crops would still grow, we'd still breathe, and the rain would still continue. The animal kingdom would still be around, most of whom don't use money. Most of whom. Interesting there. If there was no such thing as money, it may be a good avenue to explore briefly. He's interested to just whether we discuss if there was no such thing as money. From Tamara, we've got money's just a promise to comfort a fool, as my 22-year-old son constantly reminds me. Christina says, why can't we live in a free world? And Kelly, you're going to like this one, Simon. Kelly says, Simon Spaniard's a bit handsome, let's have more about him.
Yeah, can more people send in those kind of things?
Yes, please. Any more compliments for Simon, or indeed any of us, please keep them coming.
Oh, no, I like it.
But yeah.
Okay, well, the guy that said, there's no money, there's only currency. Yeah, absolutely bang on correct.
And that
there
was
are many,
Mark.
many different types of currency. Now, coming on to, I think, what one of the ladies had said there, I just want to give an example of some of the things that one of the things that I do. All right, because money kind of represents the exchange of energy, right? It's a representation of that exchange of energy or the energy flow. So, in essence, every time we interact with someone, if money's involved, you've got a third party, a hidden third party that's involved in that transaction, all right? The implications of that third party involvement might be really clear, all right? Or they might be behind the scenes and out of sight. So, in many respects, to do away with the current system of money, all right, and I say by do away with it, we could actually resolve everything, I totally believe, overnight, if the government was the government for the people, which it's not.
Yes, I think where you're going there, we're going to be discussing that after the news, actually.
Okay, well,
yeah.
So I won't go there now, but what I'm going to go through is just say something very small, right, very practical, all right, but it's just an example of something that I've started doing, all right. Now, people have spoken about barter. So, for example, when I was into this, 6 years ago, first got into it, of course, the natural thing is, you want to barter. But, of course, that's going to be very difficult. Yeah. You can't necessarily barter everything, right? Some things, yeah. But there are going to be some issues that come along where you just can't do a barter.
You can't carry around a cow if you just want to go out and buy a new toothbrush, can you? It doesn't work that way.
Exactly. So, for example, let me give some examples. All right. I was reading a book. I've got a book here, old manuscripts from Tudor times, and these manuscripts are talking about the concept of a loan back in Tudor times.
Oh, how
Back
interesting.
in Tudor times, it was a situation that, let's say Lioness, you wanted you needed some money, and I had some money that I wasn't using. Now, if I loaned that to you, that's a favour.
Yeah.
It's loaned on the basis that there's no interest charge, and you pay me back when you got it.
Okay.
Right? Now, why do I loan that to you? Well, presumably A, because I trust you, B, because I like you and I want to help you out, but C, because I hope, not demand, but I hope that at some point in future, if I'm in need of a favour that you can help me out with, you reciprocate.
Yeah.
Right? And that was the concept of a loan in Tudor times.
Okay.
All right? Now, of course, we all understand the difference between what went on then and what goes on now. But let me just put that into practical terms. For example, I've got a guy who's a builder, and he does odd jobs for me. He had problems with his credit, and I intervened and helped him out. Wiped off, I think it was 6 or 7 accounts for 37 grand. Lovely. Now, the point being, because I'm doing my paperwork and getting involved in what I get involved in during the day, of course, if there are practical things that crop up, I don't necessarily want, although I can do it, and I could learn it and spend time practicing and doing whatever, of course, it's easier for me to give him a tinkle and say, "Oh, do us a favour, right? I've got this that needs taking down the tip because I haven't got a van. Can you come and take that? I had a front door that had jammed and actually locked me in, right? I couldn't get out. So he came and replaced the lock, and he did a few favours for me. And the thing is, the relationship that I now have with that guy, which I've got with quite a few other people, is that I now know, because when I did the first favour for him, he wanted to do a favour back for me, and he expressed that at the time. I didn't need him to do a favour. I didn't get him to write out any promises or anything like that. When something cropped up, I contacted him as a mate, and expected as a mate, hey, can you do me a favour? Can you help me out, right? And his attitude was, yeah, because I've already helped him out. Now what you've got is an energy exchange, not involving money, and let's face it, when you look at money as it exists at the moment, it's a promise to pay. Therefore, if you're intending, because remember, you're committing fraud if you don't intend to do it, if you're intending to fulfil that promise, then the intention is the currency.
Yeah, that makes sense.
Intention is the currency.
But this sort of nice mutual indebtedness, however we would like to call it, there isn't a valid way of working. Say we want a house which is hundreds of thousands of pounds, because much as you're a lovely man, if I come and ask you, Simon, will you buy me a house, you probably can't.
Well, if I had the money, I would, Lioness.
Well, I know.
The point being...
My third.
Let's fast forward to now. So, for example, that's just a small example of how we can exchange energy with people and you're doing favours for each other. And it's just a lot nicer than even involving these notes. When we look at the mortgage, and as you say, if you needed somewhere to live, would I buy you a home? Well, what's actually going on with the land registry and the treasury, based on some research, some fantastic research done by one of the bunnies who contacted me, and I went and spent a day over with one of the bunnies and went through all this information that she'd actually managed to obtain from land registry. And as far as I'm concerned, this is the game you're playing. The land is free.
Yes.
The land is free, right? However, as to create the illusion that you've got to pay for it, so you've got to pay the man, what's happening is that Land Reg, in conjunction with Treasury Solicitor's Office, are manufacturing these titles. They've just created these titles, these title numbers. And what they're doing, because in the game of Monopoly, a piece of paper with a signature on it is money, right?
Yeah. They
are literally using instruments just in order to actually transfer in their world, in the made-up illusion world, in the Matrix, to transfer a title to you, which in effect you're paying for.
Yeah.
You're paying for the title, not the land.
Yeah, well, land used to be. I've got really old deeds to my house. My house was built in 1829, I think, if I remember rightly. I've got the big, huge old deeds that were all handwritten with a stamp on them. They're beautiful, beautiful documents just in themselves. They're works of art.
Yep.
But in there they say that the transfer of title was fee simple, which means you own everything,
Right.
up to the sky and down to the centre of the earth.
Right.
And now, if you look, it says that we are proprietors.
Mm-hmm.
which is commerce. It's a commercial title, so we are effectively leasing it from presumably the Crown, who claims to own everything and everybody, apparently.
Yeah, you're leasing a plot of, in the Matrix, in that veil. So let's pretend that you've got the planet Earth, you're holding it in your hand like Atlas, and then you take a black bin liner and put the bin liner over the Earth. That is the Matrix, the bin liner. And on the bin liner, down every street, there's a postcode that's been written on it, and if you were to imagine the map that you get from Land Reg when you buy your home, all right, you get those little blocks where it shows your little portion on the map, which is supposed to equate to real existence, right, the real land.
Yeah.
Now, the point being, we are buying those, whether they call them hereditaments or whatever, we're buying those floating, imaginary portions of that black bin bag. Mm-hmm. That's what we're actually dealing in.
Yeah.
That's what we've been conned and conditioned to recognise as being the reality, when in fact it's a representation of the reality. And a representation, if you look at the meaning of the word, means that it doesn't necessarily have to, just bears a resemblance almost. It doesn't have to be anything like or anything exact as to the truth. It just has to, in some way, shape or form, resemble. It's like me, performing in a play and representing Richard III or whatever. How do I know what he looked like or how he acted or how he spoke? I haven't got a clue.
Well, it's like if you imagine that I always think if I'm standing on the moon and looking back at the Earth, when you think about boundaries, they say, this is England, this is Wales, this is America, this is Mexico, whatever. I don't see any dotted lines painted on there, do you?
It's a very two-dimensional viewpoint, somehow.
Absolutely. So, the point being, it's just a control mechanism. We know this. It's been built up over years. And, in effect, the system that we know, love and enjoy at the moment is merely a front to hide from us the fact that everything was acquired by force.
Yeah, so we come back to that subject on nearly, no matter what we talk about here, it always seems to come round to the fact that this legislation is force, law is force.
Again, I go further, I say it's actually legislation is violence, not force. Force is what you use to stop violence. That's just
perpetrator.
Yeah.
But no, totally agree. And that's exactly what it is. And the biggest, as far as I'm concerned, I contemplate these things all the time. Right? In fact, my brain is filled with gameplay and contemplation on this stuff if I'm not working consciously on something 24/7.
I know the feeling.
And, it comes back to the same thing and the same thing and the same thing time after time after time after time. And that is, if we wake people up, it ain't going to happen anymore.
Right. Sorry, it sounds like a bomb just went off here, just somebody banging the door. We've got 3 minutes here, unfortunately, until the news comes in, and so we're going to have to wind it up a little bit. Just wanted to say, when I was planning this show this week, I traipsed around many of the banks in Torquay, most of the banks in Torquay, and I explained I was doing a live show for Riviera FM about money, and I invited them all to come in and join us as a guest and to help us understand how mortgages and credit comes about. And I said it would be a nice way for them to advertise some of their products and to the local people. Lloyd's Bank, a nice lady manager, she said she'd have to get clearance because there were things they're not allowed to say. And I found that curious. Why would you have things you're not allowed to say?
There are official secrets, private secrets, and all sorts of secrets. Trade secrets.
What is it? Lies and damn lies, I think. Mm-hmm. Anyway, she said you have to find out, get clearance because there were things you were not allowed to say. I tried to ask her what those things were, but she didn't say, and she became rather defensive. She said she'd call me back the following day, and we're still waiting. Halifax in Torquay. Once I'd asked at customer inquiries, the lady went off and returned mop-handed and stated simply, "We don't want to do it." Nat West, the area manager, Felicity, very nice lady I met, she was there. She said again that she'd have to find out what she could and couldn't say, but she sounded very keen. "I'll call you back soon," she said. The silence is deafening, and so on and so on and so on. Bank after bank, the same fear, the same disclaimer, the same silence. These UK banks received £37 billion bailout from the likes of you and I, yet they won't even discuss what they do with us. They don't want us to know what is money.
It's commercially sensitive information, and what's sensitive about it is it's a complete con.
Yeah, isn't it, Jazz? I think we're going to expose that. Well, I have to thank you very, very much for coming on today. Really enjoyed talking to you, Simon. It's been wonderful. Is there anywhere that people can find out more about you or what you do?
Yeah, sure. Well, the main kind of interface that I have with people out there at the moment is the White Rabbit Trust YouTube channel. And that's where I attempt to get creative and display my fantastic sense of humour. Right?
Well, I think you've displayed that for us perfectly.
But alternatively, if people want to get onto the newsletter, because I'm going to be stepping this up a little bit in a month or so's time, I'm really going to be trying to launch some training programs for people, so that people that are brand new to this have got no idea about any of it, so that it can actually kind of tap into what we would call the mainstream. That's what I'm trying to do.
Wonderful.
So I'm producing some courses and some videos, which I'm hoping are going to attract those kind of people. But anyone that wants to get onto the email list and receive the newsletter as and when it comes out, it's whiterabbiteducation@gmail.com.
Well, that's wonderful. It's nice and clear. whiterabbiteducation@gmail.com. Thank you very much, Simon.
My pleasure.
Have a lovely day. Thank you very much for joining us.
You too. Take care.
Bye now.
Bye.
Broadcasting online.
www.riviera.fm.
Torbay's community radio station. This is Riviera FM. This is Riviera FM.
If anyone who doesn't know what that is, then I don't know where you've been all my life, but that was Can't Buy Me Love by... Who is that by? Now, who is that by? I think that was probably by the Beatles. Welcome back to the second half of today's show. You're listening to the Lioness on Riviera FM, and today we're talking about what is money. Now, we've got Max here to tell us about, well, so a little bit of history here, something really interesting.
Yes, let's set the scene. It's very, very nearly 100 years ago. We're talking July 1914. The country is bankrupt. They probably won't admit that.
Again.
Well, the first Bankruptcy Act that I know of was written in 1869, so which said you're bankrupt for 70 years and you start again. But anyway, that's another thing altogether. So Lloyd George knew he was going to go to war, and he needed to fund it, and he couldn't go to the banks because the banks tend to charge rather a lot of money for if you go and ask the banks for money.
Yes, I think if we've just found out here, they call it interest.
Well, Abraham Lincoln suffered the same problem. He went to the banks to ask for money to pay for his little war going on, the Independence War, or the Confederates against the North and South, that one. And they asked him. They said, "Yeah, we'll give you 36%."
36% interest.
Interest, yeah. So he decided
no thanks.
Not to, and then somebody pointed out to him that in the Constitution, the American Constitution, it states that government, Treasury, can produce its own money. So he did that, and as did John Kennedy. Now, I don't know if anybody recognises any sort of connection between John Kennedy and Abraham Lincoln.
Yes.
Yeah. John Kennedy put about 4 billion Treasury notes. Now, a Treasury note is basically the Treasury creating the note itself with no interest. So, during the First World War, this chap, John Bradbury, who was, he was all sorts of things, but he was sort of joint permanent secretary to the Treasury, and he was the principal bloke. During the First World War, he was the chief economic advisor. And he brought into being the Bradbury note, Bradbury pound.
Bradbury pound. So before, the government the Bank of England wanted to charge the government interest on borrowing money to go to war.
Absolutely. War is quite a lucrative business.
Yes, it's also quite expensive, particularly for the taxpayer, isn't it?
Yeah.
Well, but we hear all the time about this, it costs X amount of money, but there's the other side of it, that X amount of money is going into somebody's pocket.
Well, if we've been paying, we have to pay taxes all the time. And those taxes aren't going to what we think they're going to.
They're certainly not. It seems to go into a central pot.
They're going straight back to the banks. It's because it's the interest.
Yes.
As Simon discussed earlier, the first thing you pay back on the mortgage is the interest before you start getting into the capital.
And this is the Bank of England's policy. They say in order to keep us out of austerity or some such nonsense. Anyway, so this guy, Mr. Bradbury, following what JFK and Abraham Lincoln...
No, it's in between Lincoln and JFK.
Yeah.
Yeah.
Right.
This is 1914 we're talking about. Lincoln was 1880.
And he was proposing that the American government created its own money.
He did.
Because
he didn't propose it. They actually produced
without interest.
They produced the American greenback.
Right. And what happened to him?
Abraham Lincoln was he was shot in a theatre.
That's the first one then.
Yeah.
I've got a gadget. I'm going to play with it. I'm not afraid.
Yeah.
And then we had JFK saying,
well, look, we don't want to borrow money from the bankers because you're charging us far too much interest. You've got us by the short and curlies, shall we say? Mm-hmm. So we're going to produce... He wrote Executive Order number 11110, which is still on the books, saying that the Treasury will produce their own notes.
Right.
And I think he put about $4.5 billion. There are still a few about.
Wow, how interesting. And then... Right, so then we come to Mr. Bradbury.
Well, I don't know. There was a mystery bullet, really, wasn't it?
Well, yes. I'm just playing with the gadget because I can.
well, Mr. Bradbury, he had quite an interesting time. He became a civil servant in 1896, and he was private secretary to the Chancellor of the Exchequer, which was Herbert Asquith, and then he got to be the first Treasury Officer of Accounts, and then he was Joint Permanent Secretary. And after the war, he was given lots of gongs and whacks over the neck and head.
In the nicest possible way, I'm sure.
With a sword.
So this Bradbury pound, then, what did this Bradbury pound actually do? It financed the war?
It financed the war. Basically, the First World War was financed by our sweat.
So these were notes that were created and printed by government rather than the Bank of England. They ran parallel to the Bank of England, like the notes you've got in your pocket now.
They went out and they came back in.
Yeah. So and they were no interest on those. So the government fund the war without paying any interest.
That's correct.
Absolutely.
That's correct. Yeah, and they also August 14th, 1914 was an interesting time. There was all sorts of acts flying around. There was the Postponement of Payment Act, which basically said they were going to stop paying anything back to the Bank of England, and they can go away, please. Interestingly, this was David Lloyd George. He was a solicitor, not a barrister, and he was Welsh, which are both unique in British Prime Ministers, apparently.
Oh, wow.
So he had much to say, and it kept going. They kept producing it until 1928, when the banks finally got fed up with it, and somehow things changed.
And then in 1929, there was a run on the banks. There was a big crash, and every of us suffered again, horrendously. Yeah, do you think that had anything to do with the crash? The fact that they took away this? Or was it more led by America?
Yeah, that was led by America, really. That part. I mean, we'd got the Bankruptcy Act from 1869, and it was to last 70 years. So that was 1939.
Right.
So when we became not bankrupt, I say we. I'm talking about United Kingdom PLC here. Yeah. When they became not bankrupt, they immediately had another war and borrowed an awful lot more to get bankrupt again. Right. So it's a continual state of bankruptcy to be in debt to the Bank of England, which is a private company. It is not anything to do with the people of this land.
If anyone ever can find out who the shareholders are, gosh, they'd be worth their weight in gold. To find out who those people that are running this scam and perpetuating it on us and making us suffer for their greed, I think is the only way to do it. But
well, they basically have to be the richest people in the country.
Yes, narrow it down, folks. Use your own imagination. Yeah.
Yeah.
So,
I mean, and of course,
we could, were government willing, revisit the Bradbury pound again. We could create that or something similar. Government could, if it was so choose, and if the IMF were to let it without bombing us and taking us into war,
I think it's quite
allow us to reprint them so we could have our own money with no interest.
Yeah, it's quite surprising that we've managed to get this far into the show without mentioning the word usury.
Well, I was going to... Actually, Simon did touch on that.
I think I said it as well.
And that's what the Bradbury does. Yeah. It takes the usury out. It takes the crime out of the supposed money.
Usury, for people who don't know, is interest. It's what it means. You borrow
Charging
10, you're
interest
expected
on
to pay
something.
back 11 when 11 doesn't exist.
Yeah, I mean, in the 16th century, the Tudors had laws against usury.
There are laws in the Bible, aren't there, against usury?
Yeah, wasn't it kicking over the tables of the money lenders?
Absolutely, it's all about...
Yeah.
And, it's usury, it's all words, it's using, it's slavery, it's debt is slavery.
It's crime, it's dishonourable. I mean, if you follow an honourable course, you can't do it.
So at the Nick, you've got something. We've got 2 minutes here. I'm going to play a little bit of music here. Nick has got a letter here from the... Is it from the Treasury?
It is from the Treasury, yes.
It is. Which is quite interesting. It's a copy of something that actually came up on Facebook, on social media, from one of my friends, and I just printed it out. And we're not going to mention who it's to or what it's about, really, but there is a little paragraph in it that's very interesting. I'd say it's from a letter from the Treasury on their headed paper.
It was written in September 2010, and it says, "Thank you for your letter to HM Treasury about the UK's national debt. As I have responsibility for this area, I am responding to your question. There is currently no facility in place which would allow us to accept donations directly from members of the public, but I will be sure to make the relevant teams within HM Treasury aware of your proposal. The government is committed to carry out Britain's unavoidable deficit reduction plan in a way that strengthens and unites the country." Here we go. This is the bit that is of import to us. The national debt is not owned by the public, but it is owned by the government. It is not government policy to repay the national debt completely. Governments borrow in order to spread the capital cost of projects across the generations, so that all those who benefit from a government policy contribute toward it. Borrowing also allows the government to smooth its expenditures over time, allowing for a more stable tax system. If the government did not issue debt, then taxes would have to be constantly changed. This approach is unfeasible and economically inefficient. So basically we can get the people who are coming after us to pay for what we want today.
Yeah, so the government makes the money, the government makes the debt, we pay it, and they have no intention of doing anything about it.
Absolutely not.
Including bringing in something like the Bradbury pound.
Yes, indeed.
Interesting.
Riviera FM, bringing social gain to Torbay.
And welcome back. You're listening to the Lioness on Riviera FM, and today we're asking, what is money? I think it's been really interesting so far. My final guest today has been studying money and corrupt therein. He studied promissory notes and fiat currency. I don't think we've explained that term yet, fiat, so I hope he will. So with his insight into what money actually is, please welcome Mr. Mark Ceylon. Hello, Mark.
Hiya.
How are you doing? You enjoying the sun?
Yeah, great, thanks.
Wonderful. Well, thank you for coming out of it for a little while and just chatting to us.
No problem.
So, Mark, I've just talked about fiat currency here, and you said you've been listening in earlier to Simon and the rest of us talk. What is fiat currency?
The easiest way to explain it is it's money, or it's the promissory notes backed by nothing.
Right. Okay. So really, what people have got in their pocket at the moment then is what we're talking about. We are talking about promissory notes backed by nothing.
Yeah, that's it. I mean, I think it was 10 years ago when Brown sold the gold off that we had in reserve, but strangely enough, he managed to broadcast that prior to him selling off, so the price was at an all-time low for when he came round to selling off.
Yeah, it's convenient.
Perfect scheme if you've got a load of mates wanting to buy some gold cheap.
Yes, yeah, allegedly. Because, of course, our money was backed by something up until, was it 1930 or 31? We were at the gold standard, weren't we?
Well, there's a bit of... Nobody seems 100% whether it was the gold or silver. We've been backed by gold at various different points through our history.
Yeah.
This is why, of course, it's referred to as sterling, because of sterling silver.
Because it was silver, yeah. You still there?
Yeah.
Oh, good. Thought I lost you there. Yeah, so It was known as, though, wasn't it? It was known as the gold standard. That at the time, money, the notes in your hand were of a value of certain money, certain amounts of gold that were deposited in the bank, which was the surety for the lending.
Yeah, it was basically the promissory note that you had was backed up by gold. So if somebody decided to check whether you actually had the gold, they would then go to the bank, and the bank would say, yes, here's the gold, and they could take that if necessary because they had the note that was the receipt for the gold.
Right. Okay, so there was no fraud involved there. That was a perfectly legitimate transaction.
Well, allegedly, but I've got a feeling there would be some doing some naughty things even way back then.
Right. What would you say they were?
Well, basically, the people that ran the banks realised that very few people of us actually came back to get their gold back. They just carried on using the paper receipts, and so they started issuing their own receipts as money, so they could issue as much money for themselves as they wanted.
Okay. So
this sounds like fractional reserve banking to me.
Yeah, sorry.
Hi, Mark.
It's definitely the beginning of fractional reserve banking.
Fractional reserve banking, yes.
We had the Templars on the road to Palestine that were banking people's gold at the safe end and paying them out at the Palestinian end, and that was how. And they gave them a credit note to carry between the two places.
Well, yeah, of course, what they're doing on at the moment with all these come and sell your gold stuff is they know the system's about to crash, and they're going to. Of course, they've created the fact that the system's going to crash. So what do? They offer the solution. Oh, look, we've got all this gold to back the money. So let's go back to our old system, and then we can screw you. We can see you over again.
Yes. Yes. Thank you for that. So, for example, then, how would you say to listeners who weren't familiar with this fractional reserve banking? I mean, this is it's legislated. I don't know if the term is fraud, actually. And there is fraud involved in it, but it's a legislated form of making even more money out of nothing. We've already explained how money is debt, money is credit, but we have once some money is deposited in a bank, that becomes the bank's asset. Is that correct?
Yes, and so if the banks suddenly decide that they're not going to pay anyone, that's fine because you've given them. Just like when you register things, you've given them the money to look after. While they have it, it's their property to do with as they see fit.
Right. Now there was a conversation we had before we started this show, and I think it was Max that was saying there was a 1960, I think he said, was the date when the monarch's face started to appear on money.
This is going back to the Bradbury Pound. The Bradbury Pound had the King George V, King George V's face on it, and that was the first note to have the monarch's face, and we didn't get the monarch's face on the Bank of England notes until 1960. So
isn't that sort of a demonstration of another little Bible clause or saying, give unto Caesar that which is Caesar's? Is that not? It has Elizabeth Winder's name on it. It has the Bank of England's name on it. When we're asking whose money is it, whose money is it?
Well, it's those who create it, and it's their. This is the thing that probably most struggle to get, is that even though you've got that money in your pocket, if they come and say, I want my money back, you have to give it to them because it's their money, not yours.
So who would the they be in this instance?
Well, that would be the Bank of England or whoever they appointed as their agents.
Yes, now we're hearing this from police. We're hearing this now that people going on the streets with X amount of money in their pockets, and the police are saying, we're having that money unless you can prove where you got it from.
Well, there was something yesterday or the day before where a policeman has actually been done for stealing from beggars.
Well,
yeah, that's honourable, isn't it?
Oh.
Well done, love, whoever you were. Crack on. Yeah, so it makes you proud, doesn't it? Our boys in black.
So are you familiar with, obviously you will be familiar with the fractional reserve banking system?
Yeah.
So I was just saying we go to the bank, we put in £10 note into our bank account, into our little bank. That lands in the bank's assets book.
Right, well, straight away you've already got it wrong.
Right, okay.
You go to the bank and put £10 into your straw man's bank account, because you as a woman cannot have a bank account. Only a fiction can have a bank account.
Okay, well, all right. Well, I go into the bank and I put a piece of paper with Bank of England writing on it into an account with my name on it. A name on it that corresponds to what people generally call me. This is going down the free man line, and I'm
No, it's
yes.
not.
Anyway, I'm just trying to explain for the listeners to make it clear and simple. Money lands in the bank as an asset to the bank. So there's £10 in that bank now that there wasn't 2 minutes ago before I came.
Yeah.
So how would the fractional reserve banking treat that £10 for the bank?
Allegedly they would fractionalise it 10 times, but I've got a feeling now it's way higher than that. And what that means is they would lend out up to 10 times of that amount that they've got.
Right.
And the reason they can do that is because 97% of money in the world is digital. It doesn't and never will exist. It was just numbers on a keyboard.
Yeah, numbers on a spreadsheet is all you
So
get.
when they then have 10 people come up and wanting to borrow £10 each, well, they just tap the keyboard and it appears in their bank accounts and they've got £10 each, except, of course, there was only £10 to give out in the first place. So the other £90, it's been magically created by the fractional reserve Act itself by basically just, well, it's just fraud at the end of the day. That's all it is.
So this is magic. This is a magic thing that you put £10 in the bank, and the bank can magically make that into £100 for their own use.
Yes.
Right. Okay. So we're getting a clearer picture here of how this credit crunch and this debt is.
And they do the same with huge amounts, like the mortgage. You know,
with every single penny that goes in as an asset.
So hang on.
You've got your £100,000 mortgage going through, and they nationalise that. Because the banking rules state that they have to keep a certain percentage of it, which would be, I don't know, 10%, whatever it is. Then the £90,000 they lend out again. And then wherever that lands, £80,000 of that is lent out.
Well, every penny of that gets paid back in every time it goes in again and again and again. They get 10 times or 9 times.
But it's just money that never existed.
It's magic, isn't it? It's clever, isn't it? The rabbit out of the hat.
If I go in there, though, if I go into the bank and I want a loan, and they loan me £10.
No, they never loan you anything.
All right, you're right. They open a credit line of credit.
Yeah.
Okay. But they might persuade me that it's a loan.
Yes.
And then I have to pay it back. But they're going to want back £11.
Yeah.
So where do I get that extra pound?
But it doesn't exist.
Yeah.
It can never exist.
Oh,
So basically, it is like a big game of Monopoly. At the end of the day, everyone except the bank ends up bankrupt.
Loses. Yes. Yeah.
Well, that's the name of the game, isn't it? The banker always wins.
Well, ruptured by the bank.
Too big to fail, apparently, according to the government.
Well, here's the thing. The Bank of England came out last month saying that they just magically create money out of thin air. So that means the national debt is a lie.
Yep.
Well, that was created out of thin air. Yes, the Bank of England said, and I'm quoting, whenever a bank makes a loan, it creates a deposit... Ooh, woo, woo, woo. Hello, dogs. Whenever a bank makes a loan, it creates a deposit in the borrower's bank account, thereby creating new money.
Yes.
That's the Bank of England's own words. If anybody's uncertain about that, just go online and type those words into Google and with the word Bank of England, and you will see there.
So the whole story of the debt is kind of well, it's disingenuous, isn't it?
And you could all go and ask your banks to explain it to you.
Well, I tried, but none of them are going to come and talk to me.
We've got over 50,000 members that have sent letters asking them to explain it, and not one of us has had a satisfactory reply yet.
Yeah.
Nor are you likely to.
Yeah. And which group is this? Who is this who are asking this?
That's Get Out of Debt Free.
Right, okay. So that's where people could find out more about this. You do focus a lot on money and debt and all sorts of other corruptions.
Yes.
I'm choosing my words carefully here. So, would you have an opinion on what caused this credit crunch that we're all hearing about at the moment?
Yes.
Or indeed, what is this credit crunch that we're all hearing about?
Well, it's actually very simple. All they needed to do to create the credit crunch, the crash, whatever they call it a different name each time.
Yeah.
All they did is withdraw the amount of physical money that was out in the streets. And when the physical money is withdrawn, then everybody's got that little bit less, so they spend less, and then if they withdraw more out of circulation, then it becomes tighter and tighter until, bang, the crash happens. Just like when Rothschilds said that Wellington had lost at Waterloo.
That's right.
And he started selling his stuff for pennies on the pound, so everybody else started selling, and then, of course, he knew that Wellington had actually won. Then once everything had bottomed out, he bought everything for pennies on the pound and
started the Bank of England.
Yeah, pretty much, yeah.
So, but this is confusing then for people who are not aware of how this works. If we're saying that money is just numbers on a spreadsheet, how would removing physical cash from our pockets make a difference?
Just a second. It's basically withdrawing the money supply. Although 97% of the cash is actual digital anyway, when you start taking back, it always starts at people, at your, if you like, your, when you spoil yourself, you stop spoiling yourself so much. Yeah. And so then companies start to struggle. And it just has a knock-on effect to everyone else, so it gets to the point where everybody's starting to struggle because there's not enough cash out there. If the system was, right, we've got £1 billion, that's the amount of money we have in the UK, there could be no more, no less, everybody gets an equal share of that, and then whatever you do with it after that is up to you, then that would be fair. Hopefully that you wouldn't go stupid and spend it all, but it would be fair to everyone. But
it would. Again, it sounds frightening like communism, though.
Well, unfortunately, it will...
Did you use that terrible E word then? Did you say equal? Equal. You equal shares.
You said fair as well.
Yeah,
we have to be careful
these things are
like
not happening, Mark.
We need to be careful of people like this. But yeah, so this credit crunch where people are struggling and where we've now got people going on food banks and homeless being criminalised and so on, it's times are very, very, very hard for a lot of people who can't afford their second helicopter for their birthday, for example.
What are they going to do when they put the interest rate up, which is they're shouting about doing now? This is going to be massive for people.
Well, I heard that was going up about 6 months ago. And it's going to go up quite sharply as well. And you're going to have tons and tons of repossessions, and you're going to find so many people on the street. If everyone doesn't realise the fraud that's going on now, literally you're going to see people on the street, and I mean whole families.
Yes, and we just hope it's nobody that's listening, because unfortunately these things do tend to focus the mind when it's your house and your job and your money and your family. It's easy to ignore when it's someone else, or even in a different country. It's it's something else that's happening out there that we don't really need to look at.
It's going to start touching everybody soon. Very soon.
It is. It's affecting Middle England too, and I think that's where it matters.
Well,
now.
We had a lawyer in the other day, and she was saying that basically it's starting to affect them and their practice too.
Yeah, government policy now to close down small legal practices where they do criminal defence. Were you aware of that?
Well, they just take away their custom base. Their customer base has been taken away because there's no legal aid.
They're already in jail.
Yeah.
Well, I'm going to play a little bit of music. Mark, will you stay with us until after this?
Yep, no problem.
Oh, wonderful. Thank you so much. We got carried away there, just chatting and singing along there. Hi. You are listening to Riviera FM, and today we're asking, what is money? Still curious as to what is money. I'm on the phone here. I have Mark Ceylon, who has got some wonderful insights into this, and some wonderful dogs in the background too. Hello, Mark.
Hi.
You're back with us. Hi.
Yeah.
So what is money, Mark? Feedback.
Money is basically a receipt for your labour.
Yeah.
Right. Can you explain that a little clearer for the listeners?
Well, say I come out to your house and I dig your garden.
Okey-doke.
Well, if there was no money for you to pay me for that, then you would owe me that favour in the future. But rather than me come and get you for some other favour in the future, we created a medium called money so that it was easier for us to trade our skills and get equal recompense.
Okay.
So money is basically a way of getting that. But of course, when you control the money, well, you can control everything.
Yes, and who does control this?
Well, you trace it all back. For me, it all goes back to the Roman Catholic Church. and Rome.
Really? And what would be the links to that then?
Well, the fact that the monarchs gave the country to the Vatican Church back in the mid-teen hundreds. I can't remember exactly when.
12, 13, was it, somewhere in there?
Yeah, something around there. Yeah. They gave it then, and for me, they've always been working together. It's all been divide and conquer. Pretending that we're giving something to someone else, when at the end of the day I believe that they are all in it together, and the diversion, like this monarch of the UK, the monarch of Spain, the Vatican and all that, are all just illusions of separation, when in actual fact they are all in it together. That's why they've been controlling humanity for so long.
So all legs on the same spider.
Yes.
The monarchs that invaded the country actually gave the country away to the church.
Yes.
Yeah, and what document was that? That was a treaty of something, wasn't it?
Venice, I think, wasn't it? Treaty of Venice?
Versailles, yes. It was just before they created the Magna Carta, which was signed at Runnymede about 3 years later, wasn't it? Yes.
1215.
That was in exchange for his immortal soul, wasn't it? The monarch's immortal soul. I'll give you my country, you guarantee me, I'll go to heaven.
Yeah, I wonder if he's cashed that in yet. Be interesting to see the interest on that one, wouldn't it?
Well, it's a bit worrying for the chaps in the mafia who've all just been excommunicated. Yesterday, wasn't it, when the Pope basically said you're all excommunicated?
Yeah, I bet they're gutted.
They must be really worried.
They must be really gutted. They really must be. I feel so sorry for them, really. Must affect business no end.
It is quite interesting though, because if you actually look back through history, no serving priest has ever been found guilty of child molestation in any way, shape or form.
Yet.
No.
Yet.
And it won't happen because the church sacks them before it gets to that stage.
Oh, I see what you mean.
It doesn't come back on them. They're all goody two-shoes.
Is that pretty much the way the Parliament's going, isn't it?
That's why the Pope's, the former Pope who's still alive, which I'm still getting over in my brain that we've got two popes at the moment, one emeritus or whatever. He's not going to leave the Vatican, is he?
I wouldn't think so. It's not safe for him.
No, I think we're straying into Kevin Annette's territory here, aren't we?
Yeah.
Rather than money at the moment. So promissory note. Well, you and I have chatted about this before, haven't we?
Yeah.
What's in your pocket is a promissory note. It must be a promissory note. It's prima facie evidence is a promissory note because on the front of it says, I promise to pay.
Yeah.
Yeah, we're all agreed on that. No one argues with that. Okie doke. So what you've got in your pocket with £5, £10, £20, or if you're lucky, £50 written on it, is a promissory note, and it is issued by the Bank of England. But there are other types of promissory note. Anything that says, I promise to pay you, is a promissory note. So if I borrowed 10 quid off you and I've written a little IOU, I promise Mark I'll pay you 10 quid when I've got it, or next week or Thursday or whatever, I promise to pay you that on demand, let's say. So whenever you want it back, you can come and get it. You've got this IOU. That is a promissory note in exactly the same way as the thing in your pocket, the £5 in your pocket.
Absolutely.
Right, so we've established already that the Bank of England promissory notes are a fraudulent promise. They can never be
redeemed.
That's the word I'm looking for, thank you, Nick. They can never be redeemed. They can never be honoured. No one can pay you because there's nothing to pay you with except another promise.
So it's us that give them credit.
So if you came to me with that IOU that I'd written to you for £10, you give me £10, I've given you an IOU. If you come to me with that and say, I want my £10, if I were working in the same way that the Bank of England was, I would simply write another IOU, £10, and give it to you, and you would be happy and off you'd go.
Yep.
Yeah, exactly. But people think that sounds a ridiculous concept, and it is a ridiculous concept, but it is exactly the same process.
It's a ridiculous concept if we try to do them. If we write our own promissory notes and give them to them...
Well, this is something that's been...
Well, that's been mooted, hasn't it?
This is something that's been discussed and dealt with. Now, banks, the UK banks, I have done a little research on this, and I don't know, I think you have too, Mark, to do with promissory notes. Now, banks, all the UK banks that I have looked at, and I think I can honestly say I have looked at every single UK high street bank, have what's called articles of association. Now, these are the things, these are the documents when people create a business and they register it, that word again, with Companies House. I'm sure plenty of people listening have got businesses here. They put their details on Companies House. Part of the details you put with Companies House are saying how this business is going to be run, who we're going to have as shareholders, what money we're going to take, who we're going to transact with, etc. All the details about what makes this business. And every single high street bank in the UK that I have looked at, and I'm usually pretty careful that I don't miss anyone out, have in their articles of association that are lodged with Companies House a document that says they accept, amongst other things, promissory notes. It's part of one of their clauses. And every single bank that I have found this in, and I have found this in every single bank, that they accept promissory notes, not one of them has a single clause that says, except in certain circumstances, as in, we only accept Bank of England ones. It doesn't. It says we accept. It doesn't. There are no get in or get out clauses. We accept promissory notes, we accept trusts, we accept deeds, we accept cash, we accept blah blah, and one of the terms is promissory notes. So, yes, obviously, it's obvious, it's clear to everyone that they accept Bank of England promissory notes, because that's what we're all walking around with in our pocket. But what happens when we were to write one out of our own and give it to the bank? What would happen then, Mark?
Well, John Whitrick, who's a partner on this site, he actually interviewed a banker, and the banker agreed to give him honest replies as long as he was kept his identity kept hidden. And that question actually came up to him, and he said, under UK law, by the law itself, I would have to accept that promissory note if you brought it into my bank.
Yeah.
And then someone else asked him, so would you accept that? And he said, no, I'd break the law.
Right. Well, we also have a Lord Denning. Lord Denning, obviously, well, not obviously, but for some people it's obvious, and for others listening it's not so obvious. Lord Denning has been a judge on many high-profile and very interesting cases. He seems to come up with some fair rulings. Do I dare say this? Fair rulings. Gosh, yes, I haven't been taken up by aliens. This is me saying this. And he has ruled on many occasions, on many cases, and he can be quoted as saying a promissory note is to be treated as cash.
Yes.
A promissory note is cash. So the thing in your pocket is cash. If you were to write one saying, I promise to pay you X amount of money for your gas bill and give it to EDF, whose articles of association also say we accept promissory notes, EDF will threaten to drag you through the courts and make you pay again whilst not returning that promissory note. So, if you were to write a promissory note and you were to give it to somebody and they accept it and they keep it, even though they say, we don't want this money, we don't believe this is real, we don't want them, we want the other sort, if they keep it, has that debt been paid?
Yes.
Right. Well, Lord Denning says it has. Their articles of association say they accept them. So why do they drag people through the court for wanting more?
Because if that ever got out that you could pay it like that, then that would the control system over us. There would no longer be helpless slaves. We'd
Game over.
Keep ourselves warm without having to worry about where we're going to get the next bit of money to pay for the heating.
Exactly. But of course the argument is that they keep the note, or they say we haven't got it anymore. Now, we've already talked about fractional reserve banking. It would seem that according to the Lord Denning ruling, and according to the banker that used to anonymously, it becomes a deposit in the bank. They can fractionalise that, whatever it was. So not only the promissory note that you've written, they haven't just got the value for that, they've got 9 times more again. It's worth 10 times its face value, as is a Bank of England promissory note. So I make out a promissory note saying I promise to pay EDF £10 on my electric bill or whatever. I give it to them. They keep it. They complain about it and say, you haven't paid us, we don't accept these. And we say, yes, you do. Your Articles of Association says so. Lord Denning's ruling says so, and they say, no, we only accept cash. And my argument is, well, when you look on your slip, on your bill, on your gas bill, it says how much cash have you paid in. They accept cash. It says cash on the bill. So you've paid cash, not the sort of cash that they would like to think that you mean, but you have paid cash. Now, I've had people attack me strongly about this and say, how dare you, this is wrong, this is fraud, you're attempting to defraud a system. How can we defraud a fraudulent system? And in court, I can only think that the judge is going to have to decide which piece of worthless paper is worth more than another piece of worthless paper backed by nothing.
And unfortunately, though, the courts, time and again, do tend to come down on the side of who pays their wages.
Well,
I mean,
not surprising. Yeah, that's not surprising, but then that's something that can be perhaps looked at as a void order later, because there is no independence of the judiciary there if they're just, propping up their boss.
Well, we do have the Crown to deal with in all this as well, don't we?
Well, a great long list of Crown. We did this the other day, and I thought of bringing it today, but I thought, no, I couldn't carry it. So much of it. Crown. Yes, because of the lack of independence in the court. Crown Court, and the judges are paid by the Ministry of Justice. The magistrates, although they only get expenses, are paid by the Ministry of Justice or executive branches of that. The courts are part of the Ministry of Justice, and the Crown prosecution is part of the Ministry of Justice, and if you were to be given a court-appointed solicitor, then they are paid for, but, well, you get the picture, the Ministry of Justice. So where is there any independence in there anyway?
Well, there clearly isn't. I mean, you can't, just simply the fact that they all swear allegiance to the Crown straight away means there's a conflict of interest. How can you have a solicitor defending you, trying to say, I'm going to do best for you, but my interests are sworn to the Crown, where the prosecutor's trying to knock you up because his interests are sworn to the Crown, and the judge, his interests are sworn to the Crown? How can that possibly be impartial?
And the Crown signs off on the legislation that they're there to decide whether you've broken or not in the first place.
Yeah,
exactly.
You could always name him fiduciary.
Yeah. Okay. So, Lord Denning has ruled promissory notes are cash. They're treated as cash. And cash is what we use. So we're going to have to sort of wind it up now. Unfortunately, we're running out of time very quickly again. We always seem to do this lately. So cash really is an illusion.
Yeah.
It is debt. It is a way of keeping debt going. It's a way of, I suppose, controlling us.
Cash is the biggest control mechanism on the planet. If we got rid of cash, you get rid of greed, because whenever there's money involved, even though many may start off with the cleanest of heart, eventually they see what else is going on and they'll get dragged into the greedy side of things, and then they start caring about money more than men and women, and that's why we're in such a sad state at the moment.
I think it is, certainly, yes. When you can wage wars over, commercial gain. It's illegal, immoral, and psychopathic.
Well, certain members of the community turn usury into a profession, and that used to be a crime.
And now you just have to go to Lloyd's Bank.
Punishable at one time by death, actually, execution.
Yeah. But there we are. Legislation is now written to cover up these sort of illegalities.
Well, most of the people writing the legislation are bankers and lawyers,
Yes.
and they're all of the same sort of family. I mean, I keep saying, how long have we had the vote? Who gave us the vote? Who gave us the parameters on what we're going to vote for? Blah-de-blah-de-blah.
If voting made a difference, it would be made illegal.
It's just the illusion of choice.
Right, yes. What is it? The psychopathic concept of adults voting for other adults to govern them. Anyway, we're going to have to wind it up now, and I have to say thank you so much for joining us. It's been an absolute pleasure, and I hope you come and join us again. Perhaps we'll have a little bit more time.
Yep, that'll be great.
All right, lovely. Thank you very much.
Okay.
Bye-bye now.
Thank you.
Well, that was interesting. Before we go, I just want to play you a little something. This is an Irish comedian who I've just found and discovered quite recently. I've asked him would he come on the show, and yes, he would have done. He would have come and talked on the show, but fortunately for him, he's on holiday. Lucky devil. So he has permitted me to use just a little bit of his comedy routine for you.
There's no point unless you have an answer, because otherwise you're just complaining. But I have an answer, and it's really simple. Here it goes. Do not pay the banks back 1 more cent. Some people don't like that idea. They say, Aidan, that's irresponsible. I'm not paying the bank. I am not paying the banks back 1 more cent. Aidan, that's irresponsible. What would happen if everybody didn't pay their debt back? What would happen then? We'd be debt free. See, you can't be confusing because obviously you don't want to steal. And if you want something from somebody, you should give it back. If I borrow someone's jumper, then they're going to get cold because they're at a loss. So I should give it back because that makes sense. But what happens if they've already been paid? What happens if the banks have already been bailed out? If they've already sold the debt with derivatives? If they've already had it insured? If they've already been paid? You're not going to pay them twice. That would be irresponsible, right? So I wanted to make sure that the banks do in fact own the debt. So I wrote them a letter and an email, and I just said, could you please prove that you owe this debt? Please give me a signed invoice and a lawful valid signed contract. I expected to get that. But instead I got this email, and at the top it wrote, without prejudice. I did not know what that meant. So I looked it up. Cannot be used in a court of law. What are they trying to hide, sneak-on bags? So I wrote back a new email, big black bold letters, with prejudice. You must produce these documents, and if you do not, the loan does not exist. You can never contact me again. Love and respect to all human beings, Aidan. And they never produced the document, and I wondered why. And I thought it's something to do with derivatives. And they make that sound complicated. It's actually really simple. You get thousands of mortgages, you put it in one deal, call it something like an asset-backed security, an ABS, and you sell it. So I thought they just sold it. But then I realised it's worse than that. There never was a contract, because what I signed is a piece of paper called a promissory note, a promise to pay. And they used that as an asset to create the money. So, my signature, sign of nature, on a piece of paper was used to create the money, and behind my back with derivatives, they've profited. So if you look at it, they actually owe me money. But I believe in debt forgiveness, so I let them off.
That's astoundingly lovely. I so wish you could have come on the show, but that was Aidan Killian there. Have a look at his other things on YouTube. He's astounding. Right, well, what an interesting show that was. That was wonderful. Thank you to everybody who's involved here. There is a campaign to bring back the Bradbury pound that we've been discussing.
Yeah.
And if you go to ukcolumn.org, you will find out more about that. Mark, you can find out more about at getoutofdebtfree.org, getoutofdebtfree.org. And sadly, unfortunately, really, that's pretty much all we've got time for. Except to just mention the little quote that we just came up with there, we just realised, and I think I might be paraphrasing slightly. If you're going to tell the people the truth, make them laugh, otherwise they'll kill you. That was Oscar Wilde. And I thought Aidan Killian did that so well, don't you?
Absolutely.
So I want to thank today's guests, Simon Spaniard and Mark Ceylon. Next week's subject will be all about what happens to the children when parents use them as collateral. Just how valuable is your child once it's in the legal system? If you've lost your child to the legal system, or if indeed you were a child caught up in a legal tug-of-war and you'd like to take part in the show, either by phone or in person, you can email me on studio@riviera.fm or message me on the Facebook page of the Lioness Raw, or on, that's RAW, or on the Riviera FM Facebook. Next up in a minute, we're going to have the 5 o'clock news, and that will be followed by Eddie Falcon and his 50s hot wax music. So, pretty good show. What is money?
I think it's the energy that we expend and promise someone else.
Yeah.
I think pretty much.
Yeah.
I don't think you can put your finger on it. I still think it's the one eye, mono eye. I think it's the wink. It's credit. Credit.
Do you give this credit?
Yeah,
do you believe this? Do you believe
credit it?
Oh, another interesting thing. You've heard of the little thing, rob Peter to pay Paul?
Yeah.
Well, St. Peter is Westminster Abbey, right next door to the Houses of Parliament, and St. Paul's is right next to the Bank of England.
Well, there we are. Not two little dicky birds, or did a little dicky bird tell you that?
Oh, there you are.
Oh, there's more to this than we'll ever know. Right, well, thank you very much. As I said, after the news, it's Eddie Falcon and his 50s hot wax music. Someone just came and popped their head in around the studio to show, yes, I'm being told that's Eddie, he's here. So it's goodbye from me, and it's goodbye from Max.
Oh, bye-bye, Max. God, good Lord.
And it's goodbye from
Get used to
Nix.
this name.
Goodbye.
Nix.
I've been the Lioness. You've been wonderful. I'll be back next Monday at 3 o'clock, and I hope you've enjoyed today's show. I love you in Lakesh.
Broadcasting online.
www.riviera.fm.
Torp Bay's community radio station.
This is Riviera FM.